this is Mohammed Akib. I've been working in the capital market industry for more than 2 years, and today I'm gonna talk about the IPO, which is initial public offering, and this IPO is quite popular in our country. Now, what is an IPO? As we all know, IPO is basically called initial public offering. But what do we mean by that? IPO is IPO is a form of raising capital by the companies. Companies can either borrow capital from the banks, or they can raise capital through the equity market. And IPO gives this kind of platform to the companies. Now, before I talk more in details about the IPO, let me tell you about the steps first. Recently, the Securities Exchange Commission of Bangladesh have passed a new law that if the companies want to go for an IPO in order to raise capital, then they have to have a minimum paid up capital of 30 crore, right? And also, the company has to have an operation for around at least for 5 years, and they must be in profit, and they have to have an operating profit for at least 3 years. So as you can see, it's not possible for any startup companies to go for an IPO in order to raise capital. In that case, startup companies go for venture capital firms, which is not quite popular in Bangladesh. And now let me tell you about the steps for launching an IPO. The company first has to decide how much capital it needs to raise from IPO, and then it hires an investment banker, and the investment banker leads the company through the whole process. First, the company has to form a prospectus, and the investment banker takes all the responsibilities of underwriting. Underwriting means if the amount of shares which is not sold, the investment banker buys that portion of the share with a minimum price. So it gives a kind of guarantee to the company through the underwriting process. And through the prospectus, the investors, they study the whole thing about the company, and they then take the decision whether they are going to invest in that company or not. In Bangladesh, the situation is like people are more interested in investing through IPOs, because IPOs are launched with their face value, which is Taka 10, and after they come in the secondary market, they come with a premium price which is above 10. So whatever the premium price is, people bound to make profit. But not everyone not everyone. It goes through a lottery system. So people they has to win the lottery first in order to get elected for the IPO system. Again, there is another system called book building method. It is quite similar to the initial public offering. The difference between book building and IPO is that through book building, the company first has to offer to the other private companies. The other private companies does a bidding for the premium price that the company wants to issue its shares, and those private companies, they sometimes do valuations, and through that valuation they bid the price, and they set a cutoff price, and the company has to issue their shares with that cutoff price. And for the book building method, the company has to go through a roadshow process. In foreign countries, roadshows are a must for even the IPOs, but in Bangladesh, the companies which want to go through the IPO process, they usually do not go through a roadshow process. These are the basic steps for launching an IPO that I have mentioned so far. So basically, the IPO has few advantages. One of the major advantage is that they can raise huge amount of capital through the equity market, which probably it would be difficult for any company if they want to raise capital through some sort of bank or bank loans. But there are certain kind of disadvantages. One of that is that the company has to be visible to the public. That means they have to publish their annual report yearly. They have to reveal everything. They have to disclose all their financials and everything to the general public. Since now the company is under the the company has turned itself into a public limited company. This is one of the major disadvantages, and also Securities Exchange Commission they impose a lot of restrictions to a public limited company, and the company has to abide and follow by all these restrictions. And yes, this is basically it for the IPO. Thank you. I think